Hi, this is Jack from Alpha Charts with a state of the market video. Today is January 1st, 2022. Happy New Year, everybody. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my YouTube channel. It really does help me out a lot, and I really appreciate it. I have hit 10,000 people subscribed, and I appreciate that. My goal for this year is 20,000 to double that number. So again, if you haven't done it yet, like and subscribe down below, and you can follow me on Twitter at AlphaCharts365. Okay, let's get going here. SPX. So had a nice hold right where it was supposed to off the bottom. Nice big move, and now it's kind of come back in low volume, but again, it was the week between Christmas and New Year's, so we really won't know the result of this move until probably this first week of the year. Again, this 47.15-ish area is what needs to hold. I think that's right where the 23-day EMA would be. If it comes in that far, if it comes back and comes over here, then this would just be another choppy mess with widening moves, which may not be so good. But as of right now, not doing anything wrong. Looking at the RSP, RSP, good breath, right? We're right near all-time highs. Again, strong move. Everything looks good, right? There's it means there's participation at least happening, which is nice to see. Qs, again, try to move higher, still in a range, like go up here potentially like that or something, it's just in a range right now, but is constructive off the bottom like everything else. We'll see if this pulls in more, and there's a lot of rotation going on under the surface still, maybe potentially out of growth names into more staples and supermarkets and things of that nature. So we'll see how that shakes out. And on the equal weight Qs, there is still a potential for head and shoulders top in play. Again, I'm not betting the farm on this in any way, shape, or form. I tend to lean bullish anyway, but it is in play. If this rolls over, then this $79 is going to be really, really important. Maybe even potentially this trend line on a closing basis. Let me just adjust that. Yes, something like this. Got 3 touches right there. Something like this potentially. That's 3 touches right there. I'll just keep it there. Yeah. So who knows as far as if this plays out or not? It's just one of the possibilities, right? Question mark. If we take out this high, 87.15-ish, then obviously this is now will be removed. But the equal weight Qs, all in all, holding up good, near all-time highs. I mean, not bad, but this week coming up, it will be really the tell. So that's we really got to keep an eye on what's going on, especially on Monday and Tuesday. Are people plowing into equities, or are they going to just, plow into more defensive names? We'll find out. IWM, middle of a nasty choppy range going on for 11 months. And yeah, I mean, there's literally sideways consolidation. When this breaks, like, we need to really pay attention, because this is some nasty, sloppy, choppy trading right here. If it breaks out, great. That's really, really bullish. If this breaks down, that is a much more bearish tone by a lot. So we just definitely needs to, I mean, that's pretty spectacular actually. And let's go into a weekly chart. I mean, the prior trend is higher, and it's done this type of basing before. Here's 2019 to October, not nearly as long though. I'm just looking back real fast just to see if it's ever kind of done this type of move. No, not really, right? Going back to 2001. So this is, it's really interesting how this happens. See over here, it did break out, and then eventually COVID hit, and that's what this was. So we'll see. But yeah, IWM, whichever way this tends to break, is going to be a very, very big move, and definitely want to be aboard if it's going to be to the upside. All right, let's look at let's look at the financials, and it's again near all-time highs. It's not that far away from all-time highs, and not doing anything wrong, right? So that's nice to see them participating, and that's all you really want is participation from the financials. You don't have to have them lead, but they look great. And semiconductors have been the leaders, and they continue to be the leaders. And you have the breakout, and you have this little flag on a much shorter time frame right over here. And so if this flag breaks to the upside, you got to be bullish, right? What more, now if this breaks down, then that's a different story. But right now, it's a bullish looking setup without confirmation. So nice to see SMH near all-time highs and have a bullish look to them. Lumber. We talked about lumber, not knowing if it was going to break down or break out from this consolidation. And I think we definitively got the break out so far, right? All these VWAPs that were important are now taken out. And, now it's extended. So it's okay if it comes back in a little bit. But looking out the next, 3 months or so, that's a bullish sign to me. That's why we look at lumber, right? Not to trade lumber per se, but to say that, as an indicator, and that looks pretty bullish. Bond ratios. So if the market's falling apart, we would expect bond ratios to be widening, and we don't see that. We see tightening, and because we see tightening, again, that is a bullish look in my opinion, and that's a positive, right, for the bull run. Yeah. Let's look at VIX. VIX coming in at a 17. That's a fairly low VIX. Looks good, nothing negative there. The VIX in also coming in at 21.2. Again, relatively low, in line with what we've been seeing. Absolutely fine. Put call ratio, you know what, it's right in the middle. I've had the 1 because that seems to be where a lot of, when things get kind of bearish, where things stop. Right now, 1 foot in the door, 1 foot out the door, that's probably a bullish sign in my opinion, because that means that the market has traders mixed up. So that's good, I think. Value line geometric index, so this is still in the range, very similar to the IWM. Again, the way that this breaks will probably break around the same time as the IWM, my guess would be. And the direction that it breaks will be extremely, extremely, extremely important. So that is the value line geometric index, measure of breadth. Speaking of breadth, 50% of stocks above the 50-day. We're up to 41.88. Again, not this gigantic bullish number, but it's improving, right? It's improving, and we'd love to see it above the 50% line. So I think everything looks good as far as breadth goes. Improving breadth is always a positive. Gold. So again, this is a chart. We look at this every week, and we have one more piece of this puzzle. And yeah, I mean, if this trend line, it's coming back up to this trend line right here, if this breaks, gold may be in play, however you want to, work it. But if it breaks, not a huge move to the recent highs, but it's a gigantic pattern. And, that's a big move right there, right? 80% move. So if this pattern plays out, again, it's a slow mover, but we'll see if that continues. Just keep an eye on gold. We're getting back to that place, right? Getting back to that spot, which is right here. So next week we may have a different take on gold. Again, it's a kind of a defensive asset. So not loving that, but it is what it is. And then let's go to let's see, Bitcoin. Here's Bitcoin on the daily. I like to do bars, and Bitcoin being the riskiest of risk assets right now, not much of a signal. It's kind of in a big choppy area, and this 41,000 or so, 40 to 41,000, that's the area that has to hold. There's maybe some type, I don't know, some kind of pattern that we need to watch. But this 41,000, that is where supply and demand has met in the past. I would not be shocked if it comes down there. That is, roughly 18% lower. Actually, I'll tell you what it is for real. About 14.5% lower. So yeah, that's that's a possibility. Again, as a risk on asset, I think that it just shows that there could be some choppiness going forward. But let's sum everything up. Overall, there's a lot more bullish signs right now than bearish signs, in my opinion. Let's look at TMX real fast. Bonds, 10-year treasury yield. Again, so below 1.75, and that's what we got to watch. A breakout above 1.75 in treasury yields, that's going to be that is going to be something that we have to watch, because growth would definitely take a hit if we see a move like this in treasury yields above this 1.75. So let's be careful with that. Okay. But yeah, looking at the Qs, overall thought is that we have more bullish signs than bearish signs right now. So in my opinion, lean bullish. Look for the relative strength that's out there. What worked in 2020 and 2021 probably is not going to work in 2022. And if you're the type of person that's going to say, all I want to be is in this time, I'm a growth stock investor, I'm a can slim investor, I'm a this investor, I'm a that investor, you may have a tougher year in 2022. There will be things that work. The markets are not broken, in my opinion, right now. They look great right now, actually. Again, I could change at any moment, but we definitely have to watch the relative strength of what the market is giving us. All right. Good luck. Happy New Year. Hope you all like and subscribe to my channel. Healthy, happy, prosperous New Year for all of us. Take care.